The Honest Money podcast is powered by 10x Investments, a licensed financial services provider. Consult with your financial advisor and let's 10x your future together.
Hi Warren, I have a question on investing in my minor child's name. If I was to invest 100,000 Rand in my daughter's name and there was interest to be paid on that investment, from an interest tax point of view, would it be my annual interest tax exemption of 23,800? Would that apply to my investments as well as hers, or would there be a separate annual interest tax exemption in her name for her investment before I would start to pay tax on the interest from her investment? So that's the one. And then similarly for things like dividend withholding tax, capital gains tax, would there be a threshold or an exemption in my minor's name because the investment is in their account, or would it be all of my thresholds and my limits that would apply to my investments as well as hers? As a follow-up, if there were no exemptions in that my minor would qualify for, in other words, if I was liable for all the tax on her investment in her name, are there any other ways besides starting this as a tax-free savings account, that any other means I could use to pay as little tax as possible on my minor's investment account?
Welcome to Honest Money. We're doing Q&A again, and we've had a fantastic voice note which I really like. And I think it's a very good question. I'm just listening to the mom talking about this, and I realize she really knows what she's talking about. So much so that I couldn't just answer this question. I had to call on my team to help me do some research. So what I am going to say, before I give you my answer, is just remember that this is a podcast for information. Please don't take this as gospel. I pay someone to do my taxes, so don't trust my tax advice as the last word. But I think I've got an idea of what's going to happen here. So just to break that question down. So if you're a parent and you're investing a reasonable amount of money, in this case, 100,000 Rand, on behalf of your child, and you're doing that for the purpose of avoiding tax, which is, tax avoidance is legal, tax evasion is illegal. So avoiding tax is entirely your right, and you should be as tax efficient as possible. But SARS is not a dummy, right? So SARS has figured this thing out. So what happens is, if your child is, let's say, 4 years old, and you're putting 100,000 Rand into an investment in your child's name, SARS isn't going to then look at the child and tax the child separately unless you've registered your child for tax and that the child becomes a taxpayer in his or her own right. What's going to happen is actually that SARS is going to tax you as the parent until your child turns 18 and then becomes a legal adult. And then then your child becomes a separate taxpayer. So unfortunately, setting money aside in your child's name and hoping that that's going to avoid tax for you is not going to happen. And even if you did it as a legal donation, just to remember here, parents are allowed to, or anybody actually is allowed to donate up to 100,000 Rand a year to someone else without paying donations tax. So donating, money to your children every year makes a lot of sense if you've got a lot of money, because you're reducing your estate and you're growing their investments and giving them a great head start in life. But just to understand that does have some tax consequences for you. You're not going to avoid tax. And equally, I know some parents will do this and set the money into their child's name, but with the pure intent of drawing that money for themselves later. So you put the money in your 3-year-old's name now, and in 8 years' time, you draw the money out and use it to buy a car for yourself. Just understand that's actually going to be taxed as if it was your money. So there isn't a pure tax reason to do this. That there's a good financial planning reason, but not a tax reason. I know in the second kind of part of your voice note, you then talk about you obviously know that you can do this, you can contribute to tax-free savings accounts for children. So just to explain that, you are allowed as a parent to do 3,000 Rand a month into a tax-free savings account in your child's name, but it's for your child. So it's not something that you can draw on. If you draw on it, you're actually going to use up your child's lifetime capacity. So just to explain, we're allowed to do 3,000 a month, which is 36,000 a year, up to a maximum of 500,000 Rand over our lifetime. So if you contribute and you build up your tax-free savings to 100,000 Rand in your child's name, and then you draw it out, your child will not be able to then be able to top that 100,000 up again later in life. That 100,000 capacity is lost. So that means their lifetime capacity now will only be 400,000. So that's really not a smart strategy for your child if you want them to be financially free one day. So rather don't do a tax-free savings account in your child's name if you're planning to use the money. However, if you are planning to kind of set your child up, with a head start financially, then tax-free savings, I think, is the first and best option. The second option is always to consider something like endowment from a unit trust company or an index tracking company, because if you leave the money in an endowment for a period of 5 years, any money that you take out of that endowment after the 5-year period will be tax-free in your hands. So if you're the owner of the endowment, you start the endowment, you put a lump sum in there and you leave it for 5 years at least, then any money that you take out will be tax-free for you. Now, this is not a too good to be true story. What's happening is every year, the endowment is paying income tax at a rate of 30%, and capital gains tax at a rate of 12%. So SARS is still getting their money, and so they're happy with endowments, and equally because they've got one big taxpayer being the insurance company to monitor. They don't have to monitor thousands and thousands of individuals. So this is not a kind of like a scam that's going to fall over one day. This is a very old and established way of investing. So if you want to invest in your child's name and you actually want your child to benefit from the money over a long period of time, there's nothing wrong with putting 100,000 Rand in the endowment now and then leaving it for your child. And when they're 25 or something, they've got a lot of money to put down on a house, or to set up a kind of a big investment for their future. So I think just understanding that there are some options around this, but starting an investment, just a generic exchange traded fund or unit trust investment in your child's name, with an amount of 100,000 or anything, thinking that you're going to avoid tax, and unfortunately not. SARS caught on to that one a long time ago. Thanks so much for the great question. As I said, please get tax advice if you're going to kind of look at these options in more detail. Honest Money is just an information session. It's not a financial planning session, and good tax advice is always worth the money. Please keep the questions coming. We love your voice notes. Even if it's not a voice note and just a message, we appreciate those as well. Thank you so much.
The Stradivarius violin is considered to be the most emotive instrument in the world. That's why you'll often hear it in investment ads, adding drama and the utmost importance to their philosophies, or for the announcement of a fancy new fund manager. 10x Investments don't need dramatic instruments to seem impressive. They let the results sing for themselves. So 10x your future without the drama. 10x is a licensed FSP.